Welcome to the Money Tips No One Told You podcast. I'm Heather with First Pioneers Federal Credit Union, and I'll be your host. At First Pioneers, we're dedicated to caring for our members' financial needs with heart, and that means providing more than just financial services. It's about empowering you to take control of your financial destiny through knowledge and understanding. This podcast is all about guiding our listeners toward a brighter financial future. So get ready to embark on a journey towards financial well-being, because at First Pioneers, we believe that when our members are financially successful, we all succeed. Stay tuned for a wealth of knowledge and inspiration. So today I really want to talk about building credit. Credit just seems to be the question that we get asked the most when we're, speaking with members, or maybe we're out in the community. And I know when I say credit, that seems a little bit broad, but credit is what seems to be the biggest issue for so many people. And, the range of questions can really be vast at times. Kind of depends on the issue or the challenge that the person that we're speaking with is facing. But for this episode, we're talking about building credit. And I know in many ways it's really geared towards the young people who are just starting out. But, some of these tips that we're going to talk about can really work for anyone who needs to maybe build or perhaps repair their credit. And this is a topic that's actually, it's kind of near to me. My son and some other relatives in my family are in this age range, and they're the ones who are maybe, graduating high school or college, and they're trying to start life as an adult on their own. And they're always questioning how to get started. And the things that I hear them say often are things like, will I ever be able to afford a home? And sometimes just as simple as, will I ever be able to afford a car? And, how does this work? How do I get started? Now, of course, some of these guys have been given financial guidance as they've grown up. Some haven't. And of course, it's all going to look different depending on the child and the environment and the person teaching them, their knowledge. There's so many variables as to what they may or may not know. And, you have the parents that are out there, we're trying, but often you just don't know everything that you need to know to teach your kids about finances. And sometimes I think it's hard as parents to really get a handle on what to teach, and then looking at your child and knowing, when are they ready to hear this information? When are they ready to learn this? And then there's the fact that, we just lead busy lives, right? And it just kind of slips through the cracks at times. And then before we know it, our kids are adults, or they're reaching adulthood. So how do we help our teenagers and our young adults build a strong financial foundation in the form of building credit? I think most of us have seen that our credit score is a really key factor in many of our financial decisions, right? And that includes getting approved for loans and credit cards, or renting an apartment. Sometimes it can even affect getting a job. And of course, a good credit score can save you money when you're able to qualify for those lower interest rates and better terms on loans. So what do they do? Well, first, let's talk about a credit builder loan. And I think I've mentioned this probably many times before, and we talk about them frequently at the credit union. But what is a credit builder loan? Well, it's just like it sounds. It's a loan that's designed specifically to help people build credit or improve their credit score. So here's a quick breakdown of how that would work. And I think you're going to find that it's very similar to other loans, really any loan. And that is, one, you're going to apply for the loan. So they're going to go to a bank or credit union, whatever they prefer, and they're going to apply. And most likely what's going to happen is they're going to get approved based on their ability to repay it more than their credit score because they don't have a credit score yet, right? So your financial institution is probably going to look at things like their income. They can show proof of income. If they have money in a savings account and things like that, because that shows that this person has the ability to repay this loan and it's not focusing on that credit score, which is what we're trying to build, right? Second, just like other loans, they're going to start to pay that loan back, and it's going to be with whatever interest is owed for the term of the loan. Now, of course, those terms may vary depending on the financial institution that you choose. And just know that often credit unions and banks are going to have a set interest rate on these types of loans. And then the third thing, and that's what we're in this for, right? It's going to build their credit history. Each payment is going to start being reported to the credit bureaus, and it's going to start helping them to build this credit history, which will then improve their credit score. So it sounds easy, right? You may be thinking to yourself, why are you doing a whole podcast about this? That's all there is to it. Yeah, well, you would think so, but we've seen some challenges with these loans, and I really wanted to go through some of these challenges to give you an idea. Some may surprise you, or they may be things that you've never thought of. So I think they're important to go through. The first one is on-time payments, and on-time payments are the biggest percentage that make up a credit score. 35% of a credit score is paying on time. And with a credit builder loan, the monthly payments are generally going to be really low. And this is by design so that hopefully it's easy for your borrower to make those payments. But there are many people that even with that design that are still late or they're missing payments. And this goes back to many conversations that we've had. Building credit, it kind of goes hand in hand with building good habits. And one big habit to make sure that you build is to make sure that you're making your payments on time. Otherwise, these loans are not going to help your score, because even as you're trying to help it, you're basically going to hurt it by missing those payments or being late on payments. So go to online banking and set up bill pay. Bill pay will automatically pay those bills for you. Whenever you tell it to, it's going to pay that bill. Put a reminder in your phone. How many of us walk around with a phone in our hand, looking at it all the time because it's telling us things, right? But do whatever you need to do to remember to pay that bill on time. The second one I really think a lot of people don't think about is you need to start building credit before you need it. A credit builder is kind of in the name, right? It takes time to build credit. It's not an overnight thing. These credit reports, they're looking for your history. They're looking at how you handle your finances. So you don't want to wait until the time that you need a car to come in and try to do a credit builder. In fact, it can take up to 6 months for the credit bureaus to really start reporting your activity. So you really need to start before you actually need it. Okay, so number 3 is I would recommend starting this at 18. And this kind of goes back to number 2. I think a lot of people don't know this either. You actually can't enter a legally binding contract like a loan before the age of 18. Now, there are other things that you may be able to do to help before 18, and we're going to get to those in a second. But for a loan that's all you, with no co-signers or no other help, you need to be 18. So I recommend if you have a child, help them start with something like this, like a credit builder at 18. Now, hopefully they won't need anything like a car loan before that. And by the time they do need it, then these loans will have helped establish a good score for them. At number 4, don't just pay it off. And I've seen people say, well, I'll just take it out, then I'll just pay it off. It's a small amount. Often a credit builder loan is for a very small amount, $500, maybe even $1,000. And they think I have the money, so I'll just pay it off. But see, that doesn't establish anything. That kind of defeats the purpose, right? These monthly payments and the amount of time that you have the loan is part of the design of what establishes your credit pattern. So if you just take it out and then pay it off, it establishes a pattern that you don't need credit and that you're not using credit. So it wouldn't look like you're a good risk to a creditor. Does that make sense? So you kind of want to follow the program to really get kind of that good reporting going onto your credit report. At number 5, finish the cycle. And this kind of goes a bit with the previous one as well. Credit builder loan programs are going to vary depending on where you get the loan. So if you are going into something that's maybe a cycle of loans, there's multiple loans to take or something like that, what we've seen is often people just don't finish. They maybe do the first part or the second part, but they just don't finish the plan. Now, of course, that's a personal choice. And perhaps, they have another way that they're helping themselves establish that credit history and that reporting. But if not, then really the only way to help to establish that credit is if they finish the plan. So if there's a plan in place, go through the whole thing. And then last, number 6 is some people are using a credit builder kind of for the wrong reasons. And I don't know, maybe wrong is not really the proper word, but a credit builder should do just that. Okay. It's designed to build your credit history, your credit score. But you have some people that they're using them basically to pay bills or something similar. It kind of defeats the purpose in a way. If you need that kind of loan, then you probably really should be looking at something like an emergency loan or a simple personal loan versus a credit builder, which I'm going to explain more about that in just a second too. And the truth is, some of the things that we're talking about are really similar when people are trying to repair credit. Your habits and how you handle credit, is this truly what this is all about? If you don't handle it responsibly, then none of these methods that we're discussing are really going to help, at least not in the way that you really want them to. It's like a lot of other things in life. Unfortunately, there's not a magic pill that we can take and it's going to fix all of our issues for us. And I mean, wouldn't that be nice, right? But a lot of building these scores is about the work that we put into it. And it can absolutely be done. I mean, things happen, right? Life happens. Things don't go perfectly, or even, just the way we wanted them to, not even about perfect. But often just a little bit of help is really all it takes to get things back on track. And that's really what we're talking about here. Okay. That just doing a little bit of work, to get things back where we need them to be. Okay, I digress. Let's get back to it. And I want to get to our new program that we have at the credit union. We actually changed up our credit builder a little bit recently, and it was kind of because of some of those things that I had mentioned before. Our old program was over a series of loans, but people, they just weren't finishing them out. Like I said, they probably really should have been getting a different type of loan for their needs, I would think. So let me see if I can break down this new credit builder program that we have. It's designed to truly build credit, and it's actually going to give you an option that will give you what's called 2 trade lines, because with this you can have a loan and a credit card if you wish. So that would be 2 different trade lines. So, okay, here's how it works. You'll have a $1,000 loan for 12 months, and 12 months that's the term that you pay it back in, right? And then we at First Pioneers, we will then put $750 into a savings account. That's for the loan. The other $250 of that $1,000 can be used for a secured credit card. So that means that the card would have a $250 limit, or you could take that $250 in cash. And then as you make your payments, that money sitting in that savings account will start to become available to you for you to use. Now, a couple of things I want to make sure I point out with this loan. Taking the credit card option versus taking the cash is how you get that second trade line. Your first trade line is the loan. Second trade line is the card. And of course, when you start making the payments, a loan and a credit card will start getting reported towards your credit and start showing up on your credit report. So while a loan looks great, and that's, what a credit builder program often is a loan. And of course, that's going to help. That's what it's designed to do. But if you have both of those on your report, that's going to look even better. So it's really a great option to really help you build that credit. The other thing about this is for the credit card, if you wanted more than $250 on the card, you can do that. You would just deposit money of your own into the account, and that's going to secure your higher limit. But that's only if you want to. It's not necessary for what you're doing here. It's a great way to start. So this credit builder idea is designed to help the borrower demonstrate that they're a responsible borrower, and their credit report will begin to reflect things like them making their payments on time, right? Making those payments. And then when you're finished, it's going to show a loan payoff, and it's going to start to just show a history for their borrower. And of course, for this one, like we said, they're actually able to show two credit products. Instead of just the loan, they're going to show a loan and a credit card. Pretty awesome, huh? But now I want to get into some other ways that a young person could establish credit besides or beyond a credit builder loan. The first one is a secured loan or credit card. So the shared secured loan is actually a little bit similar to what we just talked about with the credit builder. You can also do it a little differently. I did that with my son. I was going to pay cash for a used car for him. And instead, what he did was he took out a shared secure loan for that amount. Of course, then the loan was what he used to pay for the car. We secured that loan. We used the money that we were going to use to pay cash with, right? We put it into a savings account. So it's sitting in that savings account. It's securing the loan. It's kind of like collateral, really. And with a traditional loan, collateral would be the car or the home or whatever that you've bought. So it's kind of like the collateral. Should he default on the loan, which he will not, we all know this, right? He's going to make those payments. But anyway, the money in that account would be used to pay the loan. Now, for a shared secured credit card, it's kind of the same idea, really. That deposit you make is essentially your credit limit. So let's say you have $500 that you've started with. $500 is in the account, and that with money can't be withdrawn. It's there to secure the loan or the credit card. Oh, and let me quickly say, I keep saying shared secure. A share account at a credit union is a savings account. So that's why we say share secure. So just, to make sure that's clarified for any folks that aren't members at a credit union yet, right? And let me also clarify with this shared secured, this isn't a co-borrower situation, okay? The person taking the loan is the actual signer on the loan. So has this made sense that you're kind of borrowing against your own money? And the security is that if you were to default on your credit card, which we know you won't, like we said, you're not out here looking to do that, or you're at least going to do your best not to. But that money would then go to pay off the card or the loan. And again, this is for a secured loan. As you pay off the loan, the money in that savings account is quote unquote released for you to use. Although there's some financial institutions that they're going to hold the money until you pay off the loan in full. That's just going to depend on the bank or credit union. So just take a look at how that loan works and how they're going to handle yours. Again, the idea here is that the payments are super low so that they're just very manageable. And then it's going to report positively on your credit. Now, one more quick note. When you use a shared secured credit card, it's recommended that you want to keep your purchases small and pay that balance off each month. Again, this is about responsibility. It's about using your credit responsibly. And then, of course, your responsibility is then being reported on your credit report. And again, same as before, you want to make your payments on time and you don't want to pay that balance off early, right? You want to let the loan do the work it's intended to do. So next on our list of other ways to build credit, you could become an authorized user. I actually see this a lot, especially with parents adding their child as an authorized user on their credit card. And this can help your child build credit, but it's based on the parent's credit history. That's something to keep in mind. So it can help, it can, but sometimes not as much as you might think. Some cards report to the credit agencies for a minor, some don't. So even if they're on that account, the credit may not be reported until they turn 18. And of course, just like all credit, if the account has any issues or is being used unfavorably, that can affect the child's credit as well. So parents, if you're, missing payments or you have some high balances and things like that, that's going to affect the child's credit as well. So just keep those things in mind and make sure that it's actually going to report for them. So you may need to read the fine print, on that card or ask questions of whoever is issuing that card to make sure that it's actually going to do what you're wanting it to do. And third, you want to make sure that you're paying those bills on time. I know we said that already. I say it all the time because it's so important. Pay your bills on time. That goes for all your bills, your phone bill, utility bills, any of these and more can actually indirectly affect your credit. If you later decide to apply for a loan or a credit card and that payment history is not in good standing, then that's going to start to show up. Another thing to keep in mind when building credit is keep your balances low. If you are using credit cards, keep those balances low compared to your credit limit. This shows that you can manage your credit responsibly. Again, back to that responsibility thing, right? Another thing you can do to help your credit is you could have a co-borrower, a co-signer on a loan. Keep something in mind, though. This is a big responsibility to that co-borrower because if for any reason you're unable to repay this loan, then the co-borrower is responsible for the balance of the loan. And I've actually seen this happen where people, they didn't really understand that. They didn't know that if this person defaulted, that they were then going to be responsible for the full balance of what was left. So just make sure that the person that's signing with you understands exactly what this means. And you also want your co-borrower to be someone that has their credit in good standing. That's really important, not only to help you get approved, but to get favorable rates and terms on your loan. So I'm sure you can see there are several ways you can build your credit. But one of the biggest things I want to stress is just how important it is to be ready for this responsibility. Making those payments and making them on time, that's huge for this to work effectively and to truly build your score. So, be ready to take on that responsibility and know that you're able to do that you have the ability, the income, all those things to do that. Even for small amounts like a credit builder loan, it's still an amount that you're responsible for and that you've signed an agreement for. So just keep those things in mind. And you know what? Just know that building credit, it takes time. It can take some patience, right? But it's worth the effort. And it's best to start with these small, manageable steps. And then over time, you're going to build a really strong credit history. Because remember, like we said, the goal is to show lenders that you can handle credit responsibly. And my bonus tip for today, consider using a student credit card. There are many credit unions or banks that offer credit cards that are specifically designed for students. Often these cards are going to have lower credit limits and they may even offer things like rewards for good grades. And, using a student credit card responsibly can help you build your credit, but while you're still in school. Now, like we said before, we're going to recommend, if you have a card like this, pay that balance off in full each month if possible. Keep whatever you're putting on there, keep those balances low. Don't put too much at a time. That's going to help you avoid creating all these interest charges and avoid accumulating a lot of debt, which is what a lot of people run into. A lot of adults especially have those issues. So that's just another good habit that you're going to establish when you're dealing with those kind of credit cards. And that's all I have for today. We hope you've enjoyed this episode and it's helped and it's given you a better understanding of credit builder loans and ways that you can establish credit as a young person. And of course, if you have any questions or want to get started with your credit builder loan, feel free to visit us at either of our branches. That's in Lafayette or New Iberia, or you can even start online on our website, firstpioneers.com. And we are happy to discuss any of these ideas with you so that you're confident in this next step and you know that we're behind you every step of the way. So until next time, keep learning and stay smart with your money. That wraps up another episode of Money Tips No One Told You. We hope you enjoyed the insights and tips shared today. If you have any questions, thoughts, or topics you'd like us to cover in future episodes, feel free to reach out. If you found value in today's episode, don't forget to subscribe, rate, and leave a review. Your feedback helps us tailor future content to better serve you. There are several ways you can find us if you need further information or need to speak with a financial counselor. Visit us in person in Lafayette or New Iberia, Louisiana, or at firstpioneers.com to find out how to become a member of our family and find other financial information. Also, be sure and check out the show notes for important links and important information. Your financial journey is important to us, and we're here to support you every step of the way. We hope you have a great day, and we'll see you next time.